Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Chris Englebert, co-founder and managing partner of Englebert Financial Advisors, to discuss who qualifies as an accredited investor and how RIAs should conduct research for investment ideas. Chris, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill. Good to see you too.
All right. And with the wealth creation over the last several years, many people might not realize that they now qualify as accredited investors. What is an accredited investor and why would you want to be one?
Well, it's a really good question, Jill, because everybody's seen the market recover obviously last year, and the rules changed a couple of years ago where that if you're an individual making $100,000 a year, or you're a couple that's making $300,000 a year, I'm sorry, if you're an individual making $200,000 and a couple making $300,000, you are now an accredited investor. And then also, if you have $1 million net worth ex your residence, you're an accredited investor as well. So a lot of times people have 401ks, big IRA rollovers, and they don't realize that they are now considered an accredited investor, which is very important.
How should RIAs research investment ideas for accredited investors? It's not quite as transparent as some of the other vehicles that you guys use.
Yeah, so what ends up happening is, we see a lot of deals come across our desk. And so, a lot of hedge fund managers create, special purpose vehicles, one-off investments, et cetera. And usually the minimums are $100, $150, $250,000. And so what you got to do is there's no track records for these things. So they're usually very thematic. You've got to really know the people, you got to really know the background of the people, and you got to understand what they're trying to do as far as the investment goes. And then when you're looking at your client, you have to sit there and say, okay, if a client is an accredited investor and they happen to have $2 million, how much are we going to put into this particular deal? There's pros and cons. I mean, obviously on the Nasdaq, many of the stocks that are on the Nasdaq started out as private placements or first round funders. And, you get an example like Uber. I actually know somebody that was a first rounder in Uber. They put $250,000 in as a first rounder, and it's worth well over 50 million. So, not all deals work out. And as an RIA shop, you've really got to understand, what it is that, this company is trying to do and what they're trying to do with your client's money. Some of the things that people have to understand about doing a deal like this, like a private placement, or these one-off special purpose vehicles, is that there's a long lockup. I mean, this isn't something that's liquid. Usually the deals are a minimum of 2 years, more like 4 or 5 years. But obviously they help people diversify their portfolio, and you get access to, investments that obviously the normal person is not going to ever get access to.
Right, all good points. Let's take a look at the charts. It feels like since we spoke last in March, the markets have been in somewhat of a range. I guess the big question is, as we think about this on April 30th, as we close out the month, is it time to sell in May and go away? Because that old adage really has not held up over the past 10 years. With that said, let's take a look at the S&P 500. What levels are you focusing on there?
Well, the S&P 500 continues to power on to new highs. I mean, it's one of those things where after last year, a lot of people thought that this year wasn't going to be as good. And sure enough, right out of the box in January, little breather, pullback February, March, but April, we've powered on to new highs. What's interesting is that many market pundits' targets for the year have already been reached by the end of April. So that doesn't mean necessarily that, we're done for the year, but I would not be surprised if we see some kind of breather or respite here over the next couple of weeks.
Well, Chris, it makes you wonder now that we're getting vaccinated and it's warmer weather in the Northeast and people are jonesing to go on vacation and just get out of the house, if we'll see volumes depress a bit just because people are going to be off the desk. Granted, you could trade from anywhere, but I would imagine that, productivity might come down a little bit over the summer as we have the flexibility to get out again. So I think that's interesting. We'll have to pay attention to that while you're on in the next few months. Let's move along to the Nasdaq 100. We had earnings this week and they were quite good.
Yeah, big earnings this week, a couple of big FANG stocks. I mean, huge blowout earnings. The Nasdaq, I mean, there's been this huge tug of war between large cap value and large cap growth. And this week, large cap growth won, with some stunning earnings that we're seeing. You got the Nasdaq powering the new highs. But again, I would not be surprised to see some kind of breather because the news has been really good. And it's usually, buy the rumor, sell the news. And that looks to be like what we're getting here over the near term.
Right. And of course, the story has been growth rotating into value. What are you looking at with the Russell 2000?
Yeah, well, this is why we're still positive for the year with, on the entire equity market, because the Russell 2000 is participating, and it shows you that there's a real broadening. Last year everybody was worried because the market was pretty narrow, and then all of a sudden, first of the year, we saw, the energy complex and financials really take off. But the Russell is telling you that everybody's participating. Large companies, mid companies, small companies, value growth, they're all going up. So that's what keeps us bullish as far as what's happening. Out there as far as the equity markets go.
And how about the 10-year? Haven't heard too much about, rates going higher. It's kind of quieted down a little bit here.
Yeah, that news is quieted down, and we made a call about a month ago that we think rates probably have peaked for the year. The U.S. economy is doing gangbusters for the first couple of months. We're a little concerned about the back half of the year, but interest rates went up so fast. This was the fastest that they went up in over 50 years. So obviously it was a pretty bad bear market as far as the interest rate complex, but we think that's calmed down for the time being. And we don't, obviously the Fed is on hold well into 2022. So it looks like there's some real value right now in the longer end of the curve. And we've actually been taking advantage of that for our clients.
All right, and to wrap up here, the energy space has done quite well. What are you looking at with oil?
Yeah, the energy complex has been on fire, no pun intended, and we actually think there's more to go. Again, I would not be surprised to see a breather, but the chart that we're showing here is a weekly chart, and now we've broken above some very key, what used to be resistance levels around the $60 barrel level, and we think that this is obviously a couple things. One, it's supply constraints, because of the weather a couple of months ago down in the Gulf, but second of all, we think that the oil complex is trying to tell everybody that the economic recovery is on its way, and it's really starting to pick up steam. So we would not be surprised to see higher energy prices. And if you look, the best performing sector in the stock market has been the energy sector so far this year. And there are still many portfolio managers that are underweight the energy sector. It doesn't make up as big a weight in the S&P as it used to, but if you're a money manager, they've gotten their full weight in the financials, which have done well, but a lot of them are lagging on the energy side, and we think that there's a lot of catch up to do there.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.